With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals.
Chair Powell, if the CFPB isn't on the job right now, then who is administering J.P. Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a sec. But the answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one.
Just this weekend, the president removed the board of the Kennedy Center and made himself chairman. What would you do if the president tried to remove a member of the Federal Reserve Board?
Well, it's pretty clearly not allowed under the law.
How should we expect prices to move for basic items like tomatoes, peppers, cars, and the like if we place a 25% tariff on Mexico next month, as the president has threatened?
So, as you know, we don't do tariff policy, and we don't do commentary on tariff policy. I mean, I think just generally, when somebody's got to pay the tariff, and it can be the exporter, it can be the importer, right. It can be a middleman, and it
somebody
can be the
pays
consumer.
for it, though.
Somebody does, but
right.
You know, in some cases it doesn't reach the consumer much. In some cases it does, and it really does depend on facts that we haven't seen yet.
But that also contributes to some of the calculations on inflation overall.
It can, but
it's hard to predict.
There's a question of how persistent that would be and how large it would be.
So how concerned are you about the accelerating pace of government borrowing and the borrowing cost, which will affect families in the form of higher mortgage rates?
You know, we don't comment on fiscal policy other than to say that, as my predecessors have said, that the U.S. federal budget is on an unsustainable path. It's not that the level of spending or the level of the debt itself is unsustainable. It's that the path is unsustainable, and ultimately the level of the debt will be. So there's no time like the present to start working on this. The longer we wait, the more painful it will be. It's something we need to do and will have to do in the long run, and the short run is better than the long run for that.